when I'm getting to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy. Let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I do say that before every show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Monday, you guys. We got an action-packed show for you guys. One of my favorite topics to talk about is like, learning about business financials and, how do you actually protect yourself and build assets as opposed to massive liabilities out there. And we're going to break that down here in a second. But you guys know how we start the week. We're coming in hot this week in freight, powered by DAT. We are doing a lane analysis for you guys here. Again, this is all viewer submitted. So if you want a lane broke down on the show, I need you to email it to podcast@thefreightcoach.com. I just need shipping city, delivery city, and trailer type. All right. And again, if you want to round up to the nearest big city, so you're being a little bit more conspicuous about where your shipper is, that's fine too. Again, I don't need exact details. I just want to show you guys how I personally read freight markets and how I actually win freight by reading that. So this lane, it's dry vans today. And this is going to be a fun one to break down, you guys. This is out of Richmond, Virginia, going up to Buffalo, New York. And if you look at it, again, pay attention to the miles. That's always the first thing I look at here. And then that leads into the days of the week that this freight ships. Because again, Thursday to Monday, Friday to Monday is going to be exponentially more expensive to move for your customers, as opposed to a Monday to Wednesday with next day delivery, or if they got Thursday to next day delivery that comes along with it. But this one is showing kind of a big spike here over the last 90 days. And again, I want you to pay attention to that, because this kind of falls into that gray area category for me, where it's like I can pull a weather event that was in that market. And again, it's Buffalo in February. They're going to get bombarded with snow up here. So those are those key data points that I want you to pay attention to as you're going and bidding on freight for the long term out here. And as you can see, this market was fairly stable on the overall year mark up until about the last 90 days. And again, what happened 90 days ago? We're looking at Thanksgiving at that time, Christmas at that time. That starts to drive up a little bit of those rates. So again, that you can point to that and find a reason on why the rate spiked up. Now, the last 15 and 7 day market, when you're looking at that, again, was there a weather event that happened in there? Is that what's causing the spike, or is capacity actually drying up on that lane? So I want you to pay attention to that as you're going in, especially if this is the lane that you submitted to the show. I would hope that, you're in a spot market opportunity right now and you're bidding on a load by load basis. But if you are contracted on this lane, depending on what you bid, because again, I don't tell you what to bid on this stuff, I would be very, very careful about potentially locking in anything long-term on this. And this is just based on the last 90 days alone. There has been a giant spike in pricing on this. I would want to err on the side of caution, because again, if you do the inverse of this, again, Buffalo going down to Richmond, you guys, that lane has also shown the exact same spike on it. All right. There has also been an exponential price increase that it is going for out there. So again, is it Buffalo in February that's causing this, that there's snow, there's less capacity, or is this one of those lanes that there is a higher tender rejection rate that you can play into it, which is causing that? So again, if you're in a spot market opportunity with your customer on this lane, you're in a very good spot in the event that this remains elevated. But if you're in a contracted perspective, I hope you have dialed in your carrier partnerships on this one and you have locked in long-term pricing, because again, although the lane that we broke down here, you guys, Richmond going up to Buffalo, although there has shown a spike on it, the majority of the time, at least from my perspective, as long as you've been working with those carriers over the years and you've been keeping them busy when everybody else has been shuffling them around, you have probably locked in long-term pricing. So what you're seeing right now, that spike, you're pretty much insulated from that. But I would definitely err on the side of caution with this one on locking in any long-term pricing. If you're bidding on this, there's a lot of RFPs that are going on. This is one of those markets that I would pay attention to as one that it is definitely starting to increase, because again, when we're looking at like a $400 to $600 rate increase on there, you guys, that's sustaining. That might just be that this market in particular has flipped. So that is how I would approach this one. Again, if you're in a spot market situation, you're doing all right with your customer on getting a truck in hand. But I would, if you're locked in and if you're bidding on this lane in particular, I would pay attention to this, and I would almost want to bid higher going into this year than I would to think that it's going to drop back down to that year market. But this week in freight, you guys, powered by DAT. We do this Monday, Wednesday, Friday. If you want that lane, if you want me to break it down and show you how I would approach it, because again, I actually move freight, you guys. I actually cold call customers and win freight. This is how I would assess this lane if I was going out there to try and win some business. But let's jump into the show, you guys. I talk about learning about your business finances a lot. And I do that because it was probably the biggest learning curve for myself out there. And especially for my fleets and my drivers who are watching the show, you're going to really want to pay attention to this one. I have Rob Misselhoff on the show today to break down a bunch of awesome stuff. So Rob, thank you so much for taking the time to join me this morning.
Thanks for having me, Chris.
No, I'm looking forward to this, man. Like I know this is the first time you've been on the show, but like learning to increase my business financial acumen has been a godsend for me in my business, to actually understand that there is a massive difference out there between your personal credit, business credit, and leveraging that to like get the best rates, most importantly. And, we're going to get into all of that, but how did you get your start doing what you're doing now?
It's actually a funny story. I owned a direct mail company from 2003 to 2013, and that company was failing, not through any fault of ours, but because, now you can't run a business that does direct mail. Nobody answers it. But 25 years ago, it was a pretty good business, right? And so we had an employee that had left and had gone to work for an equipment finance company. Mm-hmm. And he was playing basketball with one of our employees, and he said, he got asked, how do you guys get your leads? And he says, well, they send out mail and a bunch of people call us. I said, wow, maybe we can somehow salvage this business. So I started selling mailers to folks that are now our competitors, right? Equipment finance companies and other finance folks, and found through that process that they weren't really being honest with their customers. They would lie to them about the rates, and they lie to them about the terms, because they said, look, these truckers and these construction guys, they don't know how to calculate anything. They don't read their contracts. We can do whatever we want. Yeah. And it was shocking to me that they would actually tell me this. And I said, I don't want to spend the next 10 or 20 years of my career helping a bunch of thugs rip off small business owners. There's lots of ways to make money, and this is not a way that I want to do it. So I said, well, maybe I'll start a website and tell people about the scams these guys are pulling, and then people will call us and we'll tell them the truth. And it worked, right? I started Smarter Finance USA, and all of a sudden the phone started ringing, and 12 years later, here we are.
Dude, I love that. I love that you took the angle of how do we stop people from getting scammed, because I think, and that honestly, like, that's kind of the angle that I've always taken with my content out there is, it's like, do I know everything? Absolutely not. But like, I want to put the right information out there to people where they know if they're listening to this show, it's at least coming from the right place. Like we're not out here looking to backdoor, or like put somebody in a bad position. We're just trying to highlight different areas of the freight market and transportation as a whole to help people make better decisions. Or, you know what, maybe go back to their current lender and ask them a couple of questions that maybe they never thought of before to ensure like they're not getting taken advantage of. Because it's like, I mean, how many, you know, if you're out there right now, like if we're looking at the current lender environment, and, you know, are you guys taking stock, Rob, of the amount of bankruptcies that you're currently seeing inside of transportation, in the like the confidence level of going out there and lending to somebody who might want to go out on their own and start their business in this market?
Absolutely. So it's a big challenge because the industry is in a lending crisis because of, and it's more than just the bankruptcies. In fact, what happened was right after COVID, spot rates spiked up, and so did equipment prices, because you couldn't get your hands on equipment. So, for example, a truck that we end up seeing a lot of for some reason is, say, a Freightliner with 500,000 miles.
Yeah.
And in 2019, someone would buy something like that, and the cost would be, you know, $40,000 or so. And by 21 and 22, that same truck was going for $80,000. And it penciled out because your spot rates, depending on whether you were doing dry van or reefer, they could be $350, they could be $4. And then as spot rates came down and trucking prices came down, we started seeing the defaults. And from the lender perspective, the lenders have trucks on their books where the person paid $80,000, $90,000, and now what they can get at auction when that loan if that loan defaults is about $20,000, when what the lender penciled out was, well, if it defaults, we'll get about $40,000. So lenders are upside down on their trucking portfolios. And so what we had to do about that was we had to go find an investor that wasn't so loaded up in trucking and was willing to didn't have a bunch of bad loans on their books, and was willing to help, for instance, single owner operators, startups, and so forth. And we found a program that helps people actually get into trucks at a more reasonable rate than a lot of the startup programs out there.
So, to me, I mean, hearing what you're saying, like lenders are over leveraged right now on equipment. They're probably, you know, again, if somebody defaults, they're liquidating for a significant loss at this point. How are you helping your clients avoid like an approval trap, right? Where it's like, hey, we're going to hook you on this, but like when it's all said and done, you're actually paying like a 15% interest rate or just something ridiculous like that comes along with it. Because to me, again, I'm not a finance expert. This is why I have a guy like you come on the show. I would assume those predatory traps are probably going to increase from certain lenders out there as their risk tolerance for equipment is probably dropping exponentially.
Absolutely. So the most important thing, and we help people, the rate isn't what's important, it's the cash flow. And so what we want to help people do, and when we're talking to somebody about a truck, is we ask them, all right, well, before you make this purchase, let's go over your numbers. What are you going to get paid per mile? Are you going to go to a load board, or do you have a contract? What do you expect to make per mile? How many miles do you expect to drive per week? What are your fuel costs going to be? What are your insurance costs going to be? Now, here's what your likely truck payment's going to be. Now, let's look at what your profit's going to be. Does that make sense? And that's really the most important thing. Sometimes folks will call up, and whether it's in construction or we do quite a bit of trucking, obviously, And we'll ask them, well, so how much do you expect to make from use of this equipment? And the answer's, I don't know. Well, if you don't know, like whether the rate, however you calculate it is, 10%, 40%, which exists, 20%. None of those numbers mean anything. What's important is how much profit are you going to make?
So let's start out with, from the beginning then. So to me, it seems like a lot of people might, again, not know their numbers, right? They would you, if you're a first time driver who's looking to become an owner operator, they're looking to buy their first truck this year, would you say not knowing what they could potentially make in a year is like their number one financial mistake they're making right now? Or what would that be?
That absolutely would be the biggest problem that we see. A lot of times when we're going over these numbers with our customers, they're surprised that we want to know, well, how much profit are you going to make? Why do you want to know that? Well, we want to make sure this is a good deal for you. And if it's not a good deal for them, it's likely not going to be a good deal for the lender, incidentally, because the lender wants the transaction to work out. If you're not making money, you're not going to keep paying for your truck.
How many people are unaware of the personal guarantee that comes along with purchasing equipment for the first time for their business?
Most. In fact, sometimes folks will have a lawyer help them set up the transaction, and their lawyer tells them, well, don't do a personal guarantee for your business. Well, if you're a startup, you're going to need a personal guarantee, period. And the answer usually is, well, ask your lawyer to lend you the money then.
Yeah. So like, why is that such a common misconception out there? Like, I always swear, like there's somebody on the internet who's always preaching like, oh, I've never had to personally guarantee anything, or I've never had to use my business credit to build my bit. I am not privy to any of those. I'm assuming they have some BS course behind the scenes that they're trying to sell somebody if they're out there trying to tell them that. Like, I have gone, my attorney has actually told me, like, hey, you're gonna have to personally guarantee this stuff if you're gonna want to do this, like FYI.
Sure.
Going to a financial institution, they have brought that up. Even getting my first business credit card, they're like, you got to personally guarantee this or we're not giving it to you. Is the lack of information, do you think it's surrounded upon like they just never thought that they would have to do that? Or is this something that you think people are, I guess, is it just something that they've just never thought of, the fact that they're going to have to personally guarantee this, and if they're not willing to, they're not going to get any financing?
So, it's a little bit of both. There is the you just never heard of it, right? Because you've never owned a business before.
Yeah.
But also there's a lot of misinformation, both on the internet and in the media. And I'm going to give you an example, and I'm going to stay as far away from politics as I can. Obviously, because I don't care who somebody wants to vote for. We want to help them run their business, you know. But there was the issue with the president's tax returns, then his tax returns got leaked, and there were news articles, and I heard from people in my family, did you see that guy? They made him personally guarantee a loan. And this is what, and journalists, A, don't run a business. B, most of them don't make any money. Yeah. And they don't know anything. And so you have these journalists saying, oh, this guy had to do a personal guarantee. And I was laughing because, when I bought furniture for our business, and incidentally, we had enough money in the bank account. We could have just written a check. We just wanted to build our business credit, right? And not run through our cash flow when we're buying a bunch of cubicles. I had to personally guarantee that loan.
Yeah.
The vast majority of loans out there for a business are going to be personally guaranteed. It's rare that they aren't.
Yeah. No, I think that is a big misconception that people need to accept is almost fact. And again, if you've never had to do it, congratulations, you are the anomaly. But for the majority of the regular folks out here, you're going to have to personally guarantee something. So it's like, as we're going into this, and especially in regards to like owner operators going out on their own, there's a lot of leasing scams that come out there. Like I think like the lease to own option that is out there, not all of them, right? Like my attorney always likes to remind me, like, stop making blanket statements. But like, there are some situations out there where there is predatory leasing that comes along with it. And then also, how do you advise people? Like, how are you working with your clients to explain the numbers? Because like on paper, the lease might seem like less of a risk, but how are you working with them to understand that, hey, like this is what a used truck would look like as opposed to the life cycle of this potential lease to own program?
So, well, there's a lot to unpack there, right? So, first of all, and I will tell you, not all the lease to own programs are bad. We see some that are bad and some that are really pretty good. And folks will come to us and say, hey, I've been paying X amount a week or a month on this truck, and now I've paid it down and I can own it. And we'll look at the numbers. We'll go, those are solid numbers.
Yeah.
But the scams that are out there are pretty gnarly, some of them. One of the one we see by far the most is a fake approval scam. And so what will happen is that someone will call into a company and the company wants to take the deal off the street immediately. And so they'll send out a fake approval, and the approval will say, all right, you're approved for your truck, and you're going to have a first payment and a last payment and some documentation fees due. And in reality, they haven't shopped that deal to get a real approval yet. And in some cases, we even see negative interest rates quoted on an approval. And then the lender or the broker or the lender, whoever, once they collect that money, either through credit card or ACH, they get a blank check from you. Then they go get a real approval, and the real approval is several $100s a month more than was quoted. And of course, you've now signed, because it's very rare that a trucker or any small business, particularly in a startup situation, but a single owner operator too, or even a small fleet, is going to have a lawyer review that contract because it's expensive. And they'll say, look, it's here on page 2, paragraph 5, and the font is so tiny you need reading glasses to see it. It says that we've actually earned this money. So if you don't go forward with this transaction, we're going to keep your money. And, keeping a couple of payments, it's like $2,000. It doesn't make sense to go get a lawyer to go litigate that. You spend more on lawyer fees than you get back. And small business lending is not like mortgage. It's very thinly regulated. So there's just not a lot you can do. And we see this probably every day. And the way to avoid that is, it's hard because the 2 payments in advance or a down payment, and sometimes a combination of both, is going to happen in almost every transaction if you're purchasing a truck. That's part of it. So you have to be very, very careful and do your research online. You have to look at the company and look at Google reviews, but not just Google reviews, because they can be manipulated. You have to look at, are they on the BBB? Is there complaints on the BBB? Do they have a trust pilot? And then what you want to do is you want to look at the negative complaints and really read them and see what the complaints are about, because every company has some negative reviews. No matter what you do, somebody's going to cry. But are the negative reviews, I called these guys and they couldn't get me approved? Well, we didn't make you not pay your bills, right? but if the negative reviews are this company took, $2,000 from me, and you'll literally read these in the reviews. This company took this amount of money and they wouldn't give me my money back. And they said I had to do this deal, but the deal was higher than they said it was going to be. And if people are just furious, and you see this a litany of people saying, don't ever use this company, they scam me. And you'll find on you'll find that a lot. And so it's not that hard to see. You just have to know where to look.
So what is the benefit then, I guess, like, because you see a lot of it. And again, you're not the first person that I've heard talk about that specifically, right? It's like hooking these individuals in and then they're essentially toast. How, like, are you advising people essentially, or would your advice be go to somebody like yourself first or directly to a dealer to work on financing? Like what is something somebody could ask to potentially minimize their risk of being scammed? And again, there's only so much you can do, but like, what is that thing out there? Is it like, coming and getting that pre-approval from a reputable bank, your local bank, or going direct to a dealer? I don't know. Like, what are some of your advice on that?
So we always ask our clients, well, I should say, tell our clients, first of all, we're not always going to be your best option. If you're buying a new or almost new truck from a large dealer, like, Freightliner or Peterbilt, a lot of times you can get, depending on where the market is, free or almost free financing. And that should be your first stop, right? Your second stop, because nobody can compete with 0%.
True.
And if right now I don't think it's 0%, but it's below what your mortgage would be, and which on a oftentimes used equipment that's a 5-year loan, that's a depreciating asset as opposed to an appreciating asset. So that's always going to be your first choice. Your second choice is going to be your bank or your credit union. Now, they don't, if they were really helpful, companies like mine wouldn't exist, but sometimes they say yes. So you should definitely try. And third stop is someone like ourselves. And the one caution I have, because occasionally what we do see is someone will call us up and they'll say, well, I got this quote from this dealership, and the dealership quote will be X, and you say, ask them what the cash price is. And occasionally, not always, but occasionally we'll see that if they pay cash, like the truck will be $20,000 or $30,000 less. So that's not really 0% financing. So that's the one thing to be careful of. But then lastly, if you go to your dealership and they say no, virtually every dealership has a Rolodex of guys like us that they refer customers to, that they know aren't going to rip them off. In fact, 80% of our business comes from dealerships because someone's shopping and they don't qualify for the in-house financing, or maybe if it's a smaller dealership, then they don't have in-house financing. Either way, that dealership still wants to sell the customer a truck. And most of the time, if the dealership says, hey, you can use these guys, they haven't had people coming back saying those guys ripped me off.
Yeah. No, it's great advice, right? Like, I think that, OEMs, truck dealerships, even vehicle dealers, they get a bad rap out there at times of like always trying to con somebody, and again, it takes on, but like these guys have a lot of financial risk on the line as well. And if they're advising you to go to specific companies, they've done their due diligence, right? Because like nobody goes into business to knowingly and hope to go bankrupt. All right. Like nobody does that. And especially if you're going to go out there and buy trucks. So it's like, utilize that. And if you find a reputable finance partner, your business life is going to be, I'm not going to say smooth, because it never is smooth, but like when you have the right financing behind the scenes and you have the right partners behind the scenes to help you grow your fiscal understanding of your operation, it's going to be a lot easier for you to navigate through business than it would in the inverse. But Rob, I appreciate your time. I'm going to have you back on. I hope you'll come back on later this year to continue to talk about this stuff, because again, I just want to help educate people so they're more prepared when they go into maybe their first or their second or third equipment purchase, and then they're out there just to help them stay in business, because ultimately that's all I want for the industry. But Rob, how does anybody reach out to you guys to find out more about what you got going on?
The best place is our website, smarterfinanceusa.com. We're on the socials, so if you look up Smarter Finance USA or Smarter Equipment Finance, you'll find us.
Perfect. Rob, I appreciate your time. If you guys can't find Rob or his company out there, hit me up. We will gladly put you guys in direct contact with them. But that is going to be it for today, ladies and gentlemen. As always, if you got value in what you heard and you're not subscribed, subscribe to the show, you guys. And if you're feeling ambitious, rank it on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys. And we'll be talking to you soon.
Bank, window down, yelling out money, anything. Ayy, ooh, got the foot on the gas, pedal to the metal when I'm getting to the back. Ayy, got the foot on the gas, pedal to the metal when the lane